Insights. I'm here with local lender, Geoff Snyder, owner of Clarity Mortgage. Now, just Geoff, real quick, can you tell everyone your story? When you started the business, and what got you into doing loans?
Okay, absolutely. Thanks for having me. Back in 2014, almost about 15 years ago, I started doing loans, completing transactions. And you always start off, you're working for other companies, which I did, and I found out what to do. But more importantly, I found what not to do. What really turned me off about the places that I was working in some cases where they would charge a lot of fees, and then they would also kind of run away from bad news and things like that. So I started my own company about 7 years ago called Clarity Mortgage. And one of the things that we do that most places don't is that we don't charge a dime in majority of our transactions. We don't charge a single dime of any lender fee. So the typical junk fees are never there. We don't charge points. We usually give a small credit back. And then we don't charge processing fees or underwriting fees or any of those other fees that come along with it. Other companies just assume you're going to pay $2,000, $3,000, $4,000 of these fees. So it's a much different model for the customer.
Okay. Yeah, that actually hits on one of my questions. A lot of people, they shop around and shop around and shop around looking for a loan, and they get so many different answers at the beginning. Why do some lenders put those points on there, from the get-go versus not putting any? I mean, how does that affect the buyer?
Well, I can just tell you how it works, and that'll probably answer the question, is that it's an oversimplification, but basically the government sets the rates for money, right? So the question should kind of be, why do banks have different rates at all? Why, if I go to Chase or Bank of America or Wells Fargo, why shouldn't I have the same? Why are you guys all different? Well, it comes down to how much profit they want to make, and especially with big banks. And so they'll pad their rates. We typically give our rates straight to the consumer. So whatever we get on the open market based on your credit score, what we give them. We don't pad them. So we have the opportunity, if I'm getting a 4.5% rate for a customer, I don't necessarily have to show them that. I can give them a 5% rate. But we give them the 4.5% rate. We give them the at cost rate. And there's plenty of money to be made. We're obviously been in business 7 years, and we don't think we need to jam our customers with points on top of that. So the typical lender is going to do two things. They're going to get their interest rate, which they won't tell you what it is, and then they'll add to it. And the other thing they do at the same time is they're charging points and fees. So what they'll do sometimes is they'll say, well, you can buy this rate down that's already up and padded and match their at cost rate. So they're still making the same amount of money, but they make you feel like you got a better deal on the rate where they should have been giving you that rate probably the whole time. So if that makes sense.
Oh, okay. Yeah, that sounds kind of that sounds really deceiving, actually.
Yeah, that's the inside baseball on lending.
Okay. And so you said about $2,000 to $4,000 that could be the fees associated with some of these other lenders.
Right, on average, you know how the average of the sales price has gone up quite a bit in the last couple of years. So I think the average sales price is around $240 now.
Yeah,
I think last time I checked.
Yeah.
So they're going to charge a point, so that immediately is $2,400, and then they usually have about $1,000 worth of fees. So if I had to pick a random home that was closing, I'd say we're going to save $3,400 right off the bat. The $2,400 in a point and about $1,000 in junk fees.
Okay, so average house $239, $240, looking at $3,500 right off the top there that they're saving,
right off the bat.
And they don't have to negotiate another $3,500, with the seller if they needed any help.
Correct. Yeah.
Okay.
Yep.
All right. Now I know that you guys are able to help some folks that have lower credit scores. What's the lowest you've been able to do? Well,
a couple of weeks ago, we did 2 VA buyers with 540 credit scores. And you have to have a few things going for you. If you're going to bring low credit to the situation, you're usually going to be able to put some money down, or you're showing some recent stability. You definitely have a good rental history, or there's some reasons, maybe some medical reasons, why you're in a bad situation. So yeah, low credit scores can always be done. The government still lets you do credit scores down to a 500.
Okay.
No banks will touch that.
Okay.
Yeah, 540 is probably the biggest credit success score I've had recently.
Okay. And what steps would you recommend to a buyer with a higher income, great job history, but no credit? You know, how can you help those buyers? I mean, is it possible?
Mhm. Yeah, actually, as a matter of fact, there's a no score loan where you can actually get really good rates. You can get rates almost as if you had credit scores. So there are some loans available. If you have absolutely no credit, that's one thing. If you have no score, but maybe a few old collections, you can treat those as good buyers, actually. If you want to generate that, if you've got the good income and job history and money down and ready to go, but you don't actually have a score, you can generate one really quickly with getting a couple of secured credit cards. Not always been the case, but now it takes 6 months for you to actually generate a score. But when you do generate a score, it'll be a 700 score, 740 score. It'll be a really good score.
Okay, so you can go from 0 to 700 in 6 months.
Exactly. Yeah. Now, typically, the more normal situation is, help me, I've ruined my credit. What do I do? It's the same answer. It's go get the 2 secured credit cards, and it'll bring your credit along over time.
Okay, and I run into this question all the time. So they say go get 2 secured credit cards. How much do you recommend them getting on the secured credit cards? How much?
Well, as much as you can. If they gave you a $100,000 credit card, it'd be that much big of an impact to your credit score, because what it looks at is the amount of credit you haven't used. And that's a strength on your credit score. So if you've got a $1,000 limit, that's a stronger, because it looks like you're managing a $1,000 credit limit successfully. That's stronger than managing a $300 credit limit. So the bigger the card, the biggest card I've heard of is a $500 credit card. They have some around town. The standard one is about $300. But every bank has some type of secured credit card. The banks at Home Depot, or the banks at HEB have them. The banks inside Walmart have them. They all have them. I've had customers that have gone in to go shopping, get their application turned in, go shop, and by the time they come back, they've got their answer, and then they get their card in the mail. So
Okay, so they can
they
go
make it convenient.
okay, so Walmart, you said, any of these other department stores, I don't know. Oh yeah, HEB.
Yeah.
I've seen a couple banks in there.
And it's important to note there's really nothing else that can really help your credit score. Writing those dispute letters doesn't work anymore. There's adding yourself to an authorized user doesn't work anymore. The credit industry evolves over time. So, the only thing left that works is getting the 2 secured credit cards. And if I woke up and I found myself with a 550 score, I wanted to fix it, I would be out the next day getting 2 secured credit cards. There'd be nothing else to do after that.
Nothing else to do. Okay.
Mm-hmm.
Okay. And a lot of people don't understand how those secure credit cards work. Can you
Mm-hmm.
real quick?
Yeah. You're going to go to, let's say you're going to go to your bank. Let's say you shop your bank with Chase. That'd be the first place I'd recommend you go. Go to wherever you bank. Go there, and they're going to take your information. They don't care what your credit score is, because you're going to secure the card with, in this case, a $300 deposit. And they're going to give you a card with a $300 credit limit. The day that shows up on your credit report, you're going to get anywhere from a 10 to 30 point boost on your scores, just based on your overall credit profile. So it kind of depends on your own situation. Somebody might get 10 points, somebody else might get 30, but it just depends on your overall situation. But you're going to move up, and it's the key to building your long-term credit. So if you called me today and I told you to get a couple secured credit cards, and you said, well, you never got around to it, you could call me again in a year, you're going to have the exact same score or worse, because you're going to have old collections re-report. You're going to have nothing good on your credit pulling in the other direction. So it's key to get those. That's when everything starts happening, when you get those secured credit cards.
Sooner the better. Okay. All right. And now I've heard this a couple times. People go to the bank and then they call me back and say, "Hey, well, my bank said I should get a loan, credit loan."
Yeah. No, you stay away from a loan. It looks like a maxed out credit card. The key to the credit card is it has a $300 credit limit, and your balance is 0 on day one. That looks good. A loan, say you got a $300 loan, it has a $300 maximum amount, but it also has a $100 balance. A huge negative. So it looks like you maxed out a credit card. That's why when people buy a car, their score goes down. It's like a muscle. They just exercise. You just maxed out. You just used your credit heavy when you bought a car. So your score will go down after you buy a car. You haven't done anything wrong, but just maxing out that trade line takes your score down. So there's credit builder loans, and I know those payday loan people love to do those loans, and they don't work. They're the opposite.
Okay. So would you recommend just using a little bit of that secure credit card every month, or
there's two different theories, and I have never figured out which one's actually correct. But some people say you have to charge it up to about $250. Let's say it's a $300 card. Charge it up about $275 to trigger the higher limit. Other people say just use it for $10 or $20 a month. I tend to think that you need to charge it up to trigger the limit. So take it up to $275, but then after you've done that and you've triggered that limit once, then you can always just use it for $10 or $20 a month. It'll be fine.
Okay. Yeah. That's what I've always told people, but I didn't know what the deal was.
No, you're right. And remember, I mean, nobody has a lockdown on what works for credit. Tomorrow, Experian, TransUnion, Equifax, they change their models. They tweak them all the time. So I have people that like to say, oh, well, I need to be 25% under or 50% under. Well, who told you that? Some guy, some person. Okay, well, that could change tomorrow. So that no one knows. All I know is that if I have $10 balance on a credit card of any size, I know that's going to help me. But they change those little break-even points all the time. So no one knows the exact numbers.
Okay. Now I understand you also can do manufactured home loans. What's the process with that? What do people need to know before they?
It's very similar. I think the biggest thing with a manufactured home loan, there's probably like 2 or 3 key things, and we'll do them all for you. But you need to make sure it's never been moved. It could have been in service somewhere and then moved. As soon as it's touched and been moved, no one will lend on it. I've heard of some people lending on it, but I wouldn't know who they were. The other thing is that you need to make sure it usually comes along with land, because they're usually in rural areas. You need to make sure the land isn't more valuable than the mobile home. That's probably the other situation I see most of the time. So it has to be a home loan. The home has to be 51% or greater, or 60% or greater of the actual value of the property overall.
Oh, got you. Okay.
Yeah. Other than that, there's little inspection things and things like that we'll walk you through.
Okay. Can you explain the whole DACA scenario? I understand there were some problems with that last year, and now it's kind of.
Oh yeah, DACA is a hot button because it was kind of the DACA class was kind of created by President Obama, just kind of spoken into existence a little bit. So you have this group of people that have a strange legal status. So each loan type has to try to figure out how they're going to treat a DACA recipient. And the only loan available today is a conventional loan. Conventional loans are typically going to have better credit. So you're going to end up having to have ideally a 700 score or higher if you're a DACA recipient, but you've typically been paying taxes and do them all the time. So you can buy a home. FHA has come out and said they're not going to do, DACA loans. So that's probably basically with conventional. That's your one option for a DACA recipient today.
Okay. And then this is one that I run into all the time. Many home buyers, they rely on these websites to check their credit score, or their credit card says they're going to get a free credit score, blah, blah, blah. And I always say, hey, that's good, that's cool, but you're probably a little under what they're saying, but I always say, hey, you need to talk to a loan officer about your credit score. Are there any sites out there that can get people close, or is it just what's the deal with that?
Actually, there's the FTC, Federal Trade Commission, has one. You're allowed to get one free copy of your credit report, accurate copy of your credit report, once per year for free, and it's at the Federal Trade Commission's website. And I think it's under annualcreditreport.com, and that is your accurate credit report. It doesn't include scores, but it does give you every single trade line on there, and it's actually very accurate from that perspective. The scoring, and by the scores through like a Credit Karma or one of these, scores are never correct. A lender like myself or others, you have to pay to get real scores. So these free scores that you get, they're just not accurate. So the government actually sued the credit bureaus about 2 years ago, had to admit wrongdoing. So now they call it, if you look real closely, I think they call it a credit planning score now. They don't call it a credit score anymore for legality reasons. It's always going to be 40 to 50 points inflated. So if you tell me you have a 600 score on Credit Karma, I'm going to think you have a 550. But if you tell me you have a 750, you're probably fine. You probably have a 700 score where there's nothing wrong with that. You can track movement though. So if you had a 600 score with Credit Karma, and then let's say 6 months later, your Credit Karma score is 650, that 50 points is probably a real increase. So it tells you you're going in the right direction. So it's not completely worthless, but they do use it as a tool to sell you things. You're entering your email, maybe some other information. They're selling your information immediately and telling you, hey, look, this person's interested in their credit score. They're going to buy something more than likely. So they're going to buy a house, a car, and that's when you're going to start getting a lot of junk mail and offers and phone calls from, salespeople.
These are kind of, I never use them, so these are just
the minute you enter your information's sold. So I'll have a customer, if I pulled their credit for a home, there's sneaky ways to do it. But if I'm not careful and I have some of their personal information in the wrong boxes and I haven't stripped it out completely, they'll start getting calls from another lender somewhere in the country the next day that they never talked to, they never solicited, but they've sold their information off and now they're getting on somebody else's list. And so those lists are very expensive, and that's how the credit bureaus make a lot of money.
Okay. All right. So last question. What's your feel for where interest rates are going to be going in the next, say, 12 months? I get all kinds of I get all kinds of different information every week. It's like they're going to cut the rates. They're not going to cut the rates. Where do you feel we're headed?
Well, the government only really has a few pedals to touch when it comes to trying to encourage or discourage the economy and inflation. And so one of them is lowering your interest, lowering or raising the interest rate. So they were supposed to go up this year, and then they got some bad economic data, and then they said, well, we're just going to level it out. So that was perceived really positively. We reached a 2 or 3 year low about a month ago. I did a loan for somebody with a 3.5% interest rate with no points, no fees or anything. So that was great. I couldn't get that same loan today. It's probably around 4. But who knows where they go. I used to always think they were going to rocket up 5 years ago. I would have told you that. And so it's the same.
Yeah, I've been waiting for the sevens to come back.
Yeah, me too. Yeah, they were that way back in like 2006. I remember I did a couple of 7s, and since then it's been great. And so, but it's always relative, you always want the best deal you can get. So, whether they're 7 or 17, you need to make sure you're getting whatever for the time, you're getting the lowest rate you can possibly get.
Yeah. Okay. All right. Well, awesome. Well, Geoff, I sure appreciate you letting me pick your brain there. Do you have anything else that I could share with the audience?
No. If you think you're going to buy a home, always look out for rate and fees. That's number one. And once you've done that, then partner with a realtor like yourself and find the right home. The loan part can be taken care of very quickly with one phone call. But after that, the key is just making sure you find a house that you really like. So.
Awesome. Well, folks, thank you for joining us. Geoff Snyder, Clarity Mortgage. If you need to get in touch with him, there will be somewhere here on this video a way you can contact him. If you have any questions, again, just go ahead and comment, and I'll make sure Geoff gets the question, and someone will get that taken care of for you. So I'm going to end the video and wish Geoff a great day here.